Hi, my name is Shannon McNulty, and I'm an estate planning lawyer in New York City. The, this video is about a recent New York Times article that involved the massive amount of wealth that Donald Trump's father, Fred Trump, had built up over his lifetime and passed on to his children, to Donald Trump in particular, and how the Trump family avoided paying $500 million in estate taxes. So, this article was important and interesting for a number of reasons, but politics aside, this was a fascinating look at how wealthy families pass on wealth to the next generation. So, if you didn't see the article or if you weren't able to slog through it, it was incredibly long. I hope that this video will provide you with a bit of an overview and touch on some of the topics that were really important from an estate and tax perspective. So, one of the questions that I get anytime someone has read this article and asks me about it is whether anything in the article would cause Donald Trump or any other members of the Trump family to end up in jail. I'm going to answer that question at the end, but first I want to talk about the strategies that the Trump family had put in place and utilized, most of which were perfectly legal, and to minimize their taxes. So, the first and primary strategy that was utilized by Fred Trump was to aggressively gift assets to the Trump children. It appears that Fred Trump was gifting assets to his kids almost as soon as they were born. The Times article reports that Donald Trump was earning $200,000 by the age of 3. Um, that's obviously a lot of money, and most people don't earn that at any age. But at age 3, Donald Trump, at least on paper, was earning $200,000 a year. Obviously, he was not out working at age 3, but what we can assume is that properties were gifted to him by his father, and then those properties were generating revenue that was attributed to him, and at a very high rate. So, you might be wondering, well, how does a 3-year-old get $200,000 a year? Like, what would they even do with that? And then the answer is that minor children can have assets in their names, but they don't control it until they reach age 18 legally. In this case, it's highly likely that the assets that were owned by Donald Trump were in the form of a partnership or a corporation that allowed Fred Trump to control those assets. And he also used trusts for this reason. He would gift assets to a trust, and this way it allowed him to gift the assets, get them assets out of his estate and give them away early, but also to control just the flow of money that was coming out of the corporations and the partnerships to his kids, so that didn't necessarily have access to all of the income or the assets. So, so what are the tax benefits of gifting? So to understand this, you really need to see how the gift tax and the estate tax work together. The estate tax is something we've heard about in the news, not necessarily recently, but certainly in the recent past. It's also sometimes referred to as a death tax, but the gift tax is just as important as the estate tax, and in fact, it's almost one tax. It kind of works hand in glove with the estate tax. In the industry, we call them transfer taxes. So they're transfer taxes because they're a tax on transfer of wealth from one person to another. So transferring money from one person to another, that triggers the tax, whether it's done during your life as a gift or whether it's done upon your death as an inheritance. That's a transfer, and that's what triggers the tax. So most people do not have to worry about the estate tax or the gift tax because there is a really high exemption. The exemption is currently 11 million, but it's going to go back down to about 6 million. So anywhere from 5 million to 11 million is the exemption for the gift and estate tax. Whether it's 5 million or 11 million, most families in America are not going to, this is not going to have any effect on them whatsoever. Um, but so they can gift assets and gift or leave assets in inheritance, and there won't be any tax owed, at least on a federal level. Sometimes there is on a state level, but on the federal level, that's not an issue. But for wealthy families, this absolutely, estate taxes and gift taxes absolutely are a big issue. The after the exemption, the rate is quite high. Currently, it's 40%. In the past, it's been even higher than that. When Fred Trump died in that year, the tax rate was 55%, and the exemption was much lower. It was below $1 million. So this was something, you know, more than half of his wealth could have been left to the government, basically given to the government upon his death if he did not do some pretty serious tax planning. So what did he do to minimize these taxes? So, like I said, he gifted assets aggressively while his kids were young, and that continued into their adulthood. And so, if there's a tax on both gifts and inheritances, what is the benefit of gifting? The reason that you would make a gift instead of giving something in an inheritance is from an estate tax perspective is that it's taxed generally at a lower value when it's given as a gift, especially if the child is young. So because over time that asset is going to appreciate and increase in value, so that when at the time of your death, then it's going to be worth a lot more than when your child is younger and you gift it at that time. So let's just take an example. Let's suppose that Fred Trump had gifted a piece of real estate to his son, Donald, when it was worth $5 million. So in that case, gift taxes would be payable on $5 million. If instead Fred Trump kept the property in his name and then Donald Trump inherited it on his father's death, perhaps that property could have been worth $40 million at that time. And that wouldn't be an exaggeration. Just because of the natural increase in value, and also Fred Trump's properties, they increased in value quite dramatically. So by gifting the property when it was $5 million instead of gifting it or leaving it as an inheritance when it's $40 million, he was able to save tens of millions of dollars in estate taxes. So that's just a general example of like how the gifting early would work. In addition to just gifting early, there's a number of other ways that Fred Trump minimized or reduced the value of his real estate holdings for estate tax purposes. Business owners can structure their businesses so that they are worth less on paper, and this is something definitely that Fred Trump took advantage of. It looks like he took a value, we call it a valuation discount of about 45%. That's a pretty high percent, so that saved just almost 50% in taxes. So add that on to the early gifting. You can see how these things start to compound. The Trump family also used something called a grantor retained annuity trust, or a GRAT. The technical aspects of a GRAT are just that, they're highly technical. They're not particularly interesting to most people. But it is it's a common way to transfer wealth to children free of estate tax or free of gift tax. That's something that the Trumps took advantage of. Again, this is something, all of these things that I've been talking about are legal or well within, at least, maybe on the aggressive side, but certainly well within normal or common estate tax planning. Fred Trump also used a number of other strategies to shift income from himself to his kids. So he paid his kids enormous or exorbitant salaries, high consulting fees, and he had them loan him money at high interest rates. So money was basically you're draining money out of his estate because it's being transferred from himself to his kids under the, I would say, guise of a legitimate transaction. So, were there any was there anything that was beyond, you know, what we see in traditional, typical estate tax planning, legal estate tax planning? There are two things that, to me, would possibly rise to the level of criminal activity. The first one is that it appears that Fred Trump deliberately failed to report numerous gifts that he made to his kids and just deliberately didn't report them to the IRS. So those, any kind of deliberate failure to report to the IRS can be met with criminal penalties. But that was done by Fred Trump, so that's not going to affect, obviously, he's not around anymore, so that's not going to affect his kids. The other action that is highly suspicious and that the Trump children were involved in was the children set up a shell company to serve as an intermediary between Fred Trump's businesses and his suppliers. What this business did, sort of a business because it didn't really have any, it appears that it didn't have any purpose other than to mark up supplies and then sell them to the Fred Trump's businesses. So it by doing that, it started draining money from Fred Trump's businesses into this company, the shell company that was owned by the children, and that would have been free of estate tax. If this is true, it would probably, I would say it would be an elaborate tax scheme that would probably rise to the level of criminal tax evasion, because that's not something that you would typically see. So would any members of the Trump family end up going to jail for this? Probably not. They might go to jail, but not for this reason. It's too late for the Trump family to be prosecuted for anything that was done in relation to their father's estate. But there is no expiration date or statute of limitations, we would say, on civil fines. So that is something they could still be held to. The New York State Department of Taxation has already announced that it's investigating this matter. So the Trump family may end up paying, well, at least a little bit more in the end. I hope you found this video helpful. If you did, please share it and comment on it. Please, if you have any questions about estate planning or estate taxes, feel free to send me an email. Thanks so much for listening. Till next time.